Hey there, it's Casey at TaxSaleAcademy.com, and welcome to this week's Tax Sale Question segment. This week's question comes to us from Gilbert or Gilberto on YouTube. It says, how does someone lose money with the way tax liens are structured? First off, thank you so much for your question, and thank you also for being a subscriber. It's a fantastic question. So on the outside looking in, it appears that you can't lose with tax liens. The basics behind a tax lien system is that the investor pays that tax bill in exchange for interest on their money, with the owner of that property having a set period of time to redeem that property, to cancel that lien. Now, when they cancel it, the investor gets their money back plus interest. If they fail to cancel that lien, if they fail to pay off the back due taxes, then the investor gets the property. It looks like a no-lose situation. So you have a $1,000 tax bill at, say, 10%. You're going to make $100 over the course of a year. If they don't pay to get that property, you get that property worth $50,000. Seems pretty foolproof. Unfortunately, there are a variety of ways that some people can turn this into a losing investment. Let's go over just a few of them. The first example involves low-value properties. So let's say you have a lien for a vacant lot, and that vacant lot is out in the middle of nowhere, and it's worth like $1,800. That's a pretty cheap lot, but there's a lot of liens against properties like that. Now, let's say that you buy a lien against that vacant lot for $200 after you factor in the back due taxes and the fees that the county charge and that kind of stuff. And let's say you can foreclose that lien in 2 years. So that means in addition to your first year investment in that tax lien, you have another year that passes. So that's another year's worth of taxes. So now you have $400 into that property. And now it's time to foreclose. The owner did not redeem that property. They did not cancel that lien. So you go to an attorney and you begin the full-blown tax foreclosure process, which has court costs, attorney expenses, and other various charges, which can total, say, $1,500. So now, as you can see, we're at a $1,900 investment. So without any sort of selling or marketing expenses, you're already in the hole $100. And obviously, if that lien is for something like a ditch or a water retention pond, an easement, or other valueless type property, it makes even less sense. Now, another example could be a premium bid state. Now, these states are a little bit different in that the interest rate will stay the same. It's not a bid down process or anything like that. The interest rate is going to be set by state statute, and it might be, say, 15%. Now, obviously, it's a competitive process. So the competitive process is determined by who will pay the most amount of money to own that tax lien, which means they pay more than the face value of that tax lien. So what happens here is the interest, that 15%, is only going to be paid on the face value and not the overbid. Let me give you an example here, and hopefully you can stay with me because there's going to be a lot of numbers tossed out. Let's say that there's a $100 tax lien. Nobody bids against you. You buy it for $100. In that situation, you own that tax lien for $100, you get 15% per year on your money. That's the winning scenario. Let's talk about the losing scenario now. Let's say you have a $100 tax lien, and there's a few people that want that tax lien. Somebody bids $105, somebody bids $108, and then you win that tax lien for $110. Now remember, that 15% state mandated interest is only paid on the face value of that certificate. So you get 15% on $100. That means until you earn at least $10 in interest, you'll have lost money. In this scenario, the monthly return, 15% of $100, is $1.25. What that means is if that lien is redeemed at any point prior to month number 8, you will lose money. It will take you 8 months to break even on that specific lien. So if the taxpayer redeems before them, you lose money. After then, you make money. That's another example of how you can lose money with tax liens. Another example is when you own a tax lien that just expires. You know, things happen. People forget that they own liens. People have liens and they end up dying, and their heirs have no idea that grandpa had millions of dollars invested in tax liens, and those liens just expire. Or maybe you have a tax lien and you're investing all this money, everything's going good, and then suddenly you lose your job and you don't have the money to foreclose on that tax lien in time, and that tax lien expires. What happens then? You lose everything that you had into that tax lien, and the next tax lien buyer in line for that property can then foreclose. There are a few other examples as well, but generally what we see is that the most common issues arise that are property-related issues. People simply don't perform due diligence on the underlying asset, which is the real estate that is backing that lien. And something else here that is probably worth considering is the opportunity cost. You know, I love tax liens, but if you're doing quite a bit of work and your return is 2 or 3%, you're probably doing something wrong. You should probably just consider parking that money into a CD or a high interest savings account, at least right now, instead of putting forth the work for such a low return. So it's not only just losing money on the tax lien, but you also have to factor in, what am I making with this money and how could I make more elsewhere? Again, if you're making 1 or 2% on tax liens, you probably should do something different. So, Gilberto, hopefully that has answered your question. If you have any other additional questions, or if anybody else has any questions that are watching this video right now, please feel free to leave them below this video or any of the videos that we have right here on YouTube. We will definitely respond, and we might even record a video response just like this one. And for more information on tax sale investing, make sure you check out all the links in today's show notes, including the one to our primary site at taxsaleacademy.com. Hey, take care, folks. Bye-bye.